morning, everybody. You're very welcome to today's webinar. This has been recorded, so for anyone that can't log on this morning, they can look at it over the next day or two. So I'd like to welcome Patrick O'Rourke. Patrick is a chamber member and he also works at O'Kelly Sutton. They are accountants and tax consultants. So you're very welcome today, Patrick.
Thanks, Barney.
Yeah, as ever, there's so much change happening in this landscape, and keeping up to date with everything, all these supports, even since we spoke last week. The budget has even had a further impact, so I know you had to even change your presentation since we chatted last week.
It did, so,
yeah. Yeah, look, I'm not going to try and claim that I know about this topic in as much detail as you do, so I'll let you start away with your presentation.
Okay, all right. Thanks, Barney, and hope everyone in the chamber finds some piece of this or whatever useful to their business. So I'll just talk about what I'm going to go through this morning. I'm going to talk a bit about the Employment Wage Subsidy Scheme, the EWS. That's probably the most substantial wage support that's there at the moment. So I'm going to have a few slides on that. Then I'm going to talk about some things I'm seeing in practice, which are helping business, whether it be debt warehousing and whatever. So I'll have a slide on that, and then a couple of slides on the budget. Everything's very new. This budget was just on Tuesday, so really the finer details going to be in the Finance Act, which should be issued next week, and we'll probably know more details about the schemes then. So I'll start off with the EWS. It was introduced in the July stimulus package, and it's the follow-on scheme from the TWIS, the Temporary Wage Subsidy Scheme, which was introduced in March and it finished at the end of August. So the EWS runs from the 1st September until the 31st of March 2021, and the government have said that they'll probably extend that out to the end of the year. They may tweak it depending on how it, businesses are doing. So it's very much fluid and people need to watch it carefully. There's actually a guide on the Revenue website. It's about 50 pages long, but there's only the first 23 is talking about the scheme, and then the rest of it is about examples and appendices and things like that. So really anyone that's available it should read through that guidance. It's quite useful. So as I said, it operates as a payroll subsidy support scheme. So it helps employers pay their wages with a grant payment, essentially. It's open to all sectors, and the rates are a lot lower than they were in the Temporary Wage Subsidy Scheme, but I suppose the government have to cut their cloth with what they have. They couldn't give the 350 that was available, or 410, so 410 initially, and then it kind of pro rata reduced. So here there's a flat rate depending on which band of weekly wages you fall into. So the top flat rate is 203, and if you get more than 1,462, you're out of the scheme. So the payroll software will calculate all this for you. I'll just go on to the next screen actually. And I talked first of all about the registration, and then we'll go on to how it's dealt with in the payroll system. So the first thing you need is tax clearance. So everyone should apply for that straight away, because it's thrown up a lot of issues, whether it be a director that might have some shareholding in another company, and that company mightn't have its tax affairs in order. So if you order your tax clearance for your company, it'll tell you the issues, and then you can go and address them. There's no point in I need to apply for this scheme today. You look for a tax clearance and you have issues to sort out. That's not going to work. So tax clearance is the first thing. Then you need to register for EWSS. So it's a new tax head like payroll. You actually have to register for it, and Revenue will carry the bank account that's on the Prem tax head across to EWS. So you need to be registered and have your tax clearance in place in order to get your EWS payment or grant. So, and Revenue only wants you registering when you're claiming. So they don't want people registering and then thinking, I might get into it in November or whatever. They really want you, when you sign up to it, you really have to be hitting the criteria. for applying for it. So the criteria is you have to suffer at least a 30% reduction in your turnover. And that impact has to be because of COVID related. It can't be because of a failing business or something like that. And revenue will look for that proof when they do review the scheme later on. So it's assessing your turnover for the 1st of July 2020 to the 31st December 2020 versus the same period in 2019. So for someone that's entering it in October, you're going to have actuals for July, August, and September. And then you're going to have estimates for October, November, December. And you need to review that versus your actuals for the same 6 months. So that's 1st of July 2019 to 31st December 2019. You need to compare them. If you're down by 30%, you qualify for the scheme. So I think it's much clearer than the last scheme. There's also no employer ability to pay test, and that was really a bugbear in the last scheme. So it doesn't matter if you have significant sums of money in your bank account or not, and that's not applicable here. As I said, proof will be requested by revenue at a later date. They say that they are going to review all claims under the EWIS. So you need to have proof of why you entered the scheme. What was your assessment at that point about your turnover and the impact of COVID and your calculation and your estimated turnover at that time? And you need to have that available for revenue inspection. So that will be tested later on. So onto the payroll processing. Payroll is processed as normal. You tick a box basically to indicate that you're going to claim EWIS. So it's much easier. The payroll software is much easier to process. The employee doesn't know that you're getting it because it is an employer grant. So there's nothing on the pay slip like there was with the previous scheme. So the normal PRSI class apply. You don't put any specific class J9 like was with TWIS. The employer's PRSI is 0.5%, so that's very welcome there. It helps employers significantly. Each month you have to review it. So at the end of October, you're going to review, do I still qualify for this scheme based on your best estimates out to the end of December 2020? And this is on the last day of every month, and if you feel that you won't qualify, you're to come off the scheme straight away. And if you do that, there'll be no penalty or no issues with revenue. So this is useful for, let's say, you estimated that your turnover for October, November, December wasn't going to be great. It was going to be down, and you were going to hit the 30%. So your turnover is going to be down by 30%. But let's say something happens in October, and you have a significant order, and your sales are way up, and you review it at the end of October, and your turnover is only going to be down by 15%. Well, then you come off the scheme, and the EWIS payment that you got in September or any other month is fine. There's no issue, because it's just an issue or a significant turnover that wasn't forecast. So that's quite useful for businesses and gives them confidence that entering the scheme that things can change. It's important to note there's no backdating, so you can't kind of go, oh, I'll apply for November and sure I can claim back in October. It doesn't work like that. It only works from the date that you actually register. So that's important. Payment to be made by revenue after the 5th day of the following month. So that's I suppose a cash flow. It is cash flow effect for the business in that it isn't as good as the TWIS scheme. That the cash flow is a lot quicker than that, and that's disappointing. They have improved on that. It used to be the 14th, and hopefully they'll improve it again because I think it needs a bit of work. Proprietary directors. Now there was a bit of a hoo-ha when the scheme was introduced at the beginning that proprietary directors were excluded. They're included now once they were on the payroll at any time between the 1st July 2019 to 30th of June 2020. And if you have, if you're a proprietary director in a couple of companies, you have to select one company to claim the EWIS payment for you. Multiple employments, there's a bit of difficulty there if an employee of 2 different companies. each employer does make a claim, and revenue will work out the allocation between them. There's also some businesses that will have separate business units, and one business unit could be significantly impacted, while another business unit could be thriving or just holding its own. Revenue allow the impacted business unit to claim EWIS once it's a separate business unit and it has a different management and things like that. It has to be separate, and Revenue said they're going to watch that closely because they think it could be an area that could be subject to a bit of abuse by employers. So expect, if you go down that route, to be audited. The EWIS payment, the grant payment itself, is going to be taxable on the employer, so it's going to be treated as income, and that's important to note. But it is excluded from the turnover calculation. So any COVID-related grants or payments from Revenue or any other government department is excluded in the turnover calculation, which is useful. So that's kind of a summary of the EWIS. It's very, very useful scheme. It's straightforward enough, to be honest with you. It's a lot more straightforward than the previous scheme. And the government have said that they will extend it or modify it depending on what way the COVID goes and what supports businesses need. So
can I just ask you a question there? Say if you get leader funding for a project, is that considered income? Kind of, like if you get money for a feasibility grant from the local enterprise office or Enterprise Ireland grant aid, is that considered income?
No, it would be considered income, yeah. I'm just talking about COVID related. So TWIS payments or EWIS payments, they're excluded, but any other grants would be included. So there's kind of some guidance, as I said, in the guidance document, which kind of outlines exactly what they want to see included in the turnover and how turnover is to be calculated. And they're also conscious, that there could be some manipulation of turnover as well. So just, it's meant to be in
creative accountants.
Yeah, so expect some kind of audits on that. So some topical items in practice. The income tax deadline is obviously extended to 10th of December. So that's useful, I suppose, because there was a lot of deadlines coming together at the end of October, and that's really welcome. The 3% reduced interest rate on phased payment arrangements, that's significant, and that's due to end at the end of October. So what we have there is, if people had tax debts outside of COVID, they could include them in this 3% phased payment arrangement with Revenue. And it also included, as I include there, 2019 income tax, where preliminary tax was underpaid. So a lot of people are availing of that. We see that in practice. They've underpaid their tax last year, their preliminary tax, and they have a large tax bill this year. They're able to avail of that scheme, and 3% is quite significant. So just want to flag that with listeners and viewers. The TWIS compliance program is ongoing. I've heard of some revenue letters issuing looking for repayment of the TWIS because they didn't qualify, they didn't hit the 30%, sorry, 25%. They didn't qualify or didn't hit some of the criteria. And it's kind of disappointing that Revenue are pushing that at the moment. But I suppose they did announce in the budget that can be included in a debt warehousing scheme, and I'll talk about that in a minute, if you do have a repayment to Revenue under that. The TWIS reconciliation process is continuing. So here we have a CSV file has to be submitted to Revenue by the end of October, and include basically the supports that were paid to employees during the period from March to the end of August. And Revenue are going to reconcile that, and they might owe you money or you might owe them money, but probably more than likely owe Revenue money. But that's a deadline at the end of October to be aware of if you availed of the TWIS. The last two I'll just briefly touch on because I don't think they're going to be availed of that much. there were some loss reliefs. Businesses, whether it be company or individual, self-employed, that were making losses in 2020, could set back those losses to 2019 and trigger a refund of their tax that they've already paid. Now, probably more applicable to companies, definitely not self-employed. If you have a plumber or something like that, self-employed, he's probably not incurring as significant losses because he can contain his business. He obviously will have some fixed costs, but not insignificant. And they did address that in the budget with a better scheme. The one for the companies is probably a bit better, but because they will be producing management accounts and all that. Under both schemes, the idea was that you'd estimate your losses. You could set back losses to 2019, had to be tax compliant, you had to have all your filings done with revenue. So the idea was good, but I don't think there's going to be much uptake on either of them, to be honest with you. So if I move on to the budget, obviously the budget was a significant budget, the most significant in the history of the state. It was just short of 18 billion budget, but there's only 200 odd million in tax measures. So there's very little there really for the tax practitioner like myself there. It's more supports for businesses as expected. But in fairness to the government, I think the one thing that came out of the budget was it did give small and medium-sized businesses confidence that the government would support them in whatever was necessary. And they're probably going to spend 20 billion this year and probably going to do the same in next year's budget. And that gives businesses great confidence. And that was lacking. So well done to the government, in my opinion. I'm not anyway political on that, but I think they did well in confidence. But then I suppose you turn around and the levels are increasing, and then the uncertainty for businesses is happening again. But what can we do? That's the way we're going to be for a while. The CRIS, or the COVID Restriction Support Scheme, that was introduced effective from budget day, and it's for severely impacted businesses. Now, this is in conjunction with the EWIS. You can claim the EWIS separately, but this is a scheme for severely impacted businesses. So you have to suffer an 80% turnover reduction. And what you do is you get an advance credit for trading expense, is what they call it. I don't know what that is. We'll have to wait for the finance bill next week. But I'm just concerned that this is something that could be reversed in the future and that should be taxable on. So I'm not going to say more on it until I see the actual finance bill. But I'm just flagging a concern I have on it. But you can get up to 5,000. It's 10% on the first million and 5% on the second million up to 2 million. There's no threshold, so 10 million euro company could apply for it. It's based on your turnover from the prior year, and it's, as I said, it's separate than the EWIS. It sounds a good scheme, but I'm just worried that it's is it borrowing from your future tax? It's an advance credit. I don't understand what that means, and they never explained it so far. The EWIS, it's good that they confirmed in the budget that there's no cliff edge. So that's what I'm saying there earlier, that they are going to continue on with the scheme probably till the end of 2021. And that's good confidence for business that will be there. Just flagging that the PUP payments, the COVID pandemic unemployment payment, that you can earn up to 480 euro per week gross and retain your PUP payment. Now that's quite useful because I know taxi drivers and things like this, they're struggling, and that could have a huge benefit for some of those self-employed people. The VAT rate reduction, yeah, that's very, very welcome, but probably should have been introduced in the July stimulus back in July. I think the government made a mistake there, and they haven't said as much, but sure, the businesses are closed at the moment. It's actually no good to them at the moment. But listen, it will be there. I'd say it'll be there for all of 2021. So those businesses will appreciate that. The expanded debt warehousing, as I said, the TWIS repayments, and importantly, then the self-employed can now avail of expanded debt warehousing. So debt warehousing is where you've got a debt with revenue and you can park it for a year at 0%, and then you can enter a payment plan with revenue at 3%. They accept, based on your circumstances, it could be 2 years, it could be 3 years that you repay that. So it's really, really useful and something that I think people should be availing of. The one for next year, they're also including 2020 income tax and 2021. They've already flagged this, again, to give businesses confidence. They've said if you've suffered a 25% turnover reduction on 2019, that you can bring that in as well. So that gives good confidence for next filing deadline in October, that you'll have the support of that debt warehousing scheme, and that's welcome. The commercial rates waiver to the end of December 2020. I could see that continuing on and on, depending on what levels we're in or how we're going with COVID. That's really, really important to businesses. The corporation tax rates, I noticed in the budget speech that he kind of referred to BEPS review will probably be done next summer. And that's kind of a lot of pressure from the EU and the OECD to increase our tax rates. And I think it's on the way. Unfortunately, I think our 12.5% rate is under pressure. And we're probably going to lose that over the next number of years. So people probably they'll probably see that in a plan now at the next budget. It was expected in this budget that we would have a plan of when that was going to increase. So we wait for that. Remote working, that was kind of a point mentioned in the budget. There's a group now reviewing that, and they're including broadband. Listen, we'll have to just wait for the group review to come back. We need much more on that, because I think, as a county leash, we need these hubs, and we need all the help we can get in getting people working, in their locality. Yeah. So we'll wait for that review and hope that there's a lot in it for remote working. CGT revised entrepreneur relief. Yeah, that's quite useful for businesses, high potential startup businesses that would have funding rounds, and that, when you start off, obviously you own 100% of the business, but over time you get diluted, and you might get diluted below 5%. And when you go to sell the business, you built up this business, and there could be a number of investors in it that you hold less than 5% at the time of sale, and that would knock you out of availing of entrepreneurial relief, which gives you CGT rate at 10%. So they've been lobbying on that for quite a while. So that change basically says if you held 5% at any time for 3 years, at any time, you can avail of that relief. So that's really, really useful. Farmers always get a bit in the budget. Fair play to them. They've got a rollover of all their schemes. They've got a bit on the flat rate edition. There's a lot of money gone into schemes as well. So we'll have to wait for the detail on that. But farmers can be quite happy. While there's nothing extra, all that was there was kind of rolled over. So that's quite good. The accelerated cap allowances, I was hoping for farmers that low carbon emission equipment, such as slurry spreaders with trailing shoes and that would be included in it. So hopefully the government might put that in the next couple of budgets. Family businesses, CGT rate 33% is the third highest in the EU. And basically it's an impediment for transferring businesses, small, medium-sized family businesses to the next generation. And we want to see that reduced to 20%. And we've been calling for that for a number of years. So hopefully, maybe in the next budget, when there's a bit more certainty about where we're going with COVID, we might see a bit of movement on that. But that was it. There was lots of other stuff in the budget, but not on the tax end, or not really affecting small and medium-sized businesses. And that was it, Bernie. And as regards,
I just have a question there in the rates waiver. You still have to qualify with your decline in business, isn't that the case?
Yes, of course, yeah.
So you have to show your county council. I know, talking to Laois County Council, they were surprised at the low. They would have expected a higher uptake in that particular scheme. So whether businesses just aren't going there and asking for it and not realising our businesses are doing okay. So I
Yeah,
suppose
okay.
you'd like to think the second that businesses are doing okay. And in a lot of cases, I know some businesses that had outstanding rates from last year. That didn't matter. They weren't kind of penalising you on that. And then there was one other question. I met a guy the other day, and I was talking to him about the warehousing of debt, and he said, "Oh no, I want to keep up payments of revenue. I'd be afraid it'd kind of just pile up." But would you advise people from a cash flow point of view to avail of that and spread it out over the next number of years?
I would, Bernie.
Yeah, that's what I was.
Absolutely. I
Yeah,
would. We're seeing a lot of it here. I mean, you know, you can avail of it, and you still get your tax clearance. Everything is, once you're in that phase payment or a debt warehousing scheme with revenue,
Yeah,
your tax affairs are regarded as in order.
in order.
So why not 3%,
Yeah.
or even the parking it at 0% for a year and then entering a phase payment.
Yeah.
Some people liked it, but you
Yeah.
have to be conscious that, you know, cash flow is king now at the moment. And
Absolutely, yeah. So they're the main questions I have. Sandra, do you have any questions that you'd like to ask?
Just in relation to the reconciliation process for the TWSS. You mentioned there, Patrick, that there's a cut-off date of the 31st of October for full returns, we'll say, as full declaration as to who received what. Have Revenue sent that notification individually to employers?
Yeah, I think it was last Friday week. They would have got something in my inquiry. Yeah.
Okay.
And basically, your payroll software produces a CSV file, and that CSV file is uploaded to Revenue. But obviously, you have to check it first to make sure you're happy with what goes in.
Yeah, with the return. Okay. Yeah, that's perfect. That was really the only question I had.
Okay.
Patrick, I think that was really comprehensive and easy to follow. And I'm sure you've answered lots of questions, but I'm assuming if anyone has any further questions that it's okay to contact yourself.
Yeah, absolutely. No problem at all.
And I'd love if you might send me on that revenue link that you mentioned at the start, and I can include that with the recording and the slides for all the other members that want to look at this later on.
I will do, Bernie. No problem at all. And listen, thanks very much for having us.
And thanks very much. No, that was great. And as I say, easy to, in layman's terms, let's just say.
Yeah, good.
Great.
Thank you, Patrick.
Okay, Sandra and Bernie, thanks very much.
Thank you.